beautiful necklace. Good morning, Dwayne Thomas. How are you, my friend?
Good morning, McGraw and Kelly.
Happy St. Patrick's Day.
Same to you.
All right. We were in positive territory yesterday. All good news. What happened?
Exactly. Dow Jones average closed up 115 points, ending the day at 24,873. However, both the S&P 500 and the NASDAQ had slight declines. So it really was more of a mixed day, not quite as bright as the Dow showed us.
All right. Let's get some news here. Markets in correction. What can you tell us about those?
Okay. People want to know, is it a bear market? Is it a bull market? Is it a market in correction? So let's just define that a little bit. A stock market correction is defined as more than a 10% decline off a peak. Last few years, we had a bunch of 3, 4, 5, 6% declines, but it's been a while since more than a 10% until a few months ago. A bear market is defined as more than 20% drop. So our peak was January 26, 26,616. Our recent dip following that was down about 11.8%. So it was over that 10% level to call it a correction. The average historical correction is 13%. So 11.8 is kind of in that ballpark.
Right.
What's interesting is since 1980, the average correction has lasted 44 days. We are now 34 trading days into it.
Aha.
When I said 44 days, trading days, market open days.
Sure.
So we're 34 days into it. So, now we're, initially that first drop was not fun, and it seemed like a pretty interesting buying opportunity, but how long was it going to last? That was a tough call. No one knows, but at this point, we're 34 days in with the last 40 years being an average of 44 days.
Yeah. When officially does the correction end? When you reach back to that initial high?
Yes, exactly.
Huh. Okay.
Exactly.
All right.
The other interesting part, and this is the one part that I like to really focus on right now, is we've never had a bear market in 100 years without a recession. Recessions we've had, market decline start followed by a recession, but we've never had a bear market without a recession in there. And the way the economy is going right now, we're not looking at a bear market.
Huh. Oh, I see what you're saying. Yeah.
Because we're not looking at a recession. The economy's been picking up, not slowing down.
Right. Got it. All right. Good. Hey, there you go. Good insights. All right. Well, we still have you Tiffany's, the little blue box. What's going on with the little blue box?
Well, I know you shop there a lot. Quarterly sales up 8.5%. Sales of high-end products tend to show the strength of the economy just as well. So just like we were talking about, not having a recession, Tiffany's kind of shows that a little bit. If their sales are down, then you got to look at what's going on. But the sales are up, and it's the strongest up quarter they've had in a good period of time. I'm not sure how many years, but multiple years. So good report that way.
All right, good news. And then today, Dwayne Thomas, on the day before St. Patrick's Day, it's got to be a good day today.
I would hope so. Right now the market starts with a flat opening as far as trading with the news right now. There's a lot of reports, job openings, consumer sentiment, housing starts, the heavy focus on March Madness, go Missouri Tigers tonight, and you got St. Patty's Day tomorrow. So you got a lot of activity going on here.
You have basically one giant March Madness. That is absolutely true. Dwayne Thomas, have yourself a good weekend, and thanks for checking in.
Sounds great.